Afternoon, everybody. Welcome to TraderMerlin Show. Is your Wednesday edition Tesla day today. The fireworks were fun. Fun watching that one in the after hours, although nowhere near as exciting as yesterday's trading activity. I don't know if you guys saw the tweet I did yesterday after our talk about Microsoft. And, it was interesting for me anyway to look at Microsoft from the perspective of it had that huge earnings beat, not huge, had a nice earnings beat, big spike up and formed that high tight flag that we talked about. It's like, man, that's really reassuring. One other part that you got to make sure you understand is when they have their conference call. So as they did their conference call, there was some not so positive things said about about Microsoft going forward, and that thing absolutely cratered. So for those of you who may not have seen it, let's bring up Microsoft here real quick. And don't worry, we will get to old Tesla, but I wanted just to show the 5-minute time frame that we were looking at. And as we did the show yesterday, we were in here, right? We were right in that period of time. And I had drawn that out and I said, this looks really good because it hasn't closed that gap. Typically, hey Chris, good to see you. Typically when you have a nice earnings announcement such as Microsoft, you get this real big spike up and then it comes screaming back down. Maybe not the whole distance, but at least correcting some of that move. And because it didn't do that, I really had this air of optimism going into the evening. Of course, right as we finished up the show yesterday, actually near the tail end of the show, all of a sudden Microsoft broke down. It was the conference call, and as you can see, gave back nearly everything by the time the aftermarket session closed. So that was not good. It's set up for a fairly negative trading day today. Of course, you can see what Microsoft did. There's the pre-market in yellow. So pre-market just kept drifting lower, opened up, kept drifting lower, and then found a footing and actually recouped quite a bit. It still ended up negative on the day, down 0.59%, but all in all, not too shabby, right? It looked fairly decent there for the end of the day move, even with those earnings announcements. So just goes to show you never know, and always wait for the conference call before you really hang your hat on the reaction to the people, because anytime those CEOs get together and make a comment about their business, I believe a lot of it is manipulation, where these CEOs will come out and they've already had a timeline where they sell their shares, so that's no big deal. And what they will do is they will try to temper expectations, because Microsoft's numbers look pretty good, and what they're going to say is, yeah, but going forward, we feel like there are some challenges ahead. So the next time when they report earnings, they'll be able to beat that bar that they've just lowered yet again. And I believe that's what happened out there with Microsoft. Bill's going to be on next week. Next week after the FOMC meeting. Eva says, "Where's Bill?" Bill will be on the Thursday show. Yes, Thursday, the day after the FOMC announcement. That's when he will be in here. Had to close and look you back up about 3 times for your video. Uh-oh. That's kind of weird. Well, sometimes it takes a little while to get started, but hopefully you're all here, joined us now. So let's real quickly go and look at the earnings calendar for today. And I just want to do this just to kind of set the stage and see where we're at, because so much of the talk track at this point is about earnings. So what does it look like? Here's who reported earnings today, the 25th of January. And you can see from this list some pretty big names. You had AT&T, Boeing, Tesla, IBM. What I'm going to do, though, is I'm just going to highlight the companies that missed earnings. Up there near the top, Boeing was expected to make 5 cents per share. Pretty embarrassing for a company like Boeing just to make 5 cents per share. I mean, as a shareholder, ciao Nicola, tutto bene? Nicola is my good friend from Italy. He must be bored as hell because he's watching the show today. Boeing was supposed to make 5 cents per share. They actually lost $1.75. That is a colossal beat. And what is really surprising on this one is it's only up 0.33%. You would think that Boeing would be getting absolutely murdered up there today. Here is your daily chart of it, just so you can take a peek. One that I definitely want to keep an eye on, because that is such a horrific earnings miss. Clearly, I'm missing something, because if you miss earnings that badly and you're losing money per share, why would I want to own the shares? Because that means I'm not going to make any money. So in theory, you would expect this to be much lower than it is today. We'll keep an eye on that one going forward, just because I don't trust those numbers coming out of Boeing. I'm going to skip Tesla for a second. We go to International Business Machines, which also missed, although they only missed by 1 penny. No big deal. It just goes to show you that this stuff is never fair, because IBM misses by a penny and it stays flat. Tesla will be a big one here in a second. So there's your IBM for the day. So you guys can see the IBM chart. Not much of a reaction. It's actually down in the after-hour session about 2%, and that's basically because they just reported earnings after market hours. All right, let's go to Lam Research. They were positive. Down here, United Rentals was negative, and that is it. So 3 out of the top, I guess 10 I have on my list here, reported negative earnings. But that's not the story. The story is this bad boy right here. To me, this is a pretty big story because so many people have been pointing the fingers at Tesla saying it's way overvalued, they're not selling vehicles, Elon Musk is a moron, all this crazy stuff about it. Well, they expected $1.09 per share, came out at $1.19, surprise on earnings. So I went to my AI program and I asked it to create me a picture of Elon Musk holding a trophy. And I have to say that is a pretty damn good AI rendering of Elon Musk holding a trophy. I didn't ask it to put him in a tuxedo or make him look all fancy, but really did an amazing job. And this is, again, I'm using AI graphics to generate the pictures here. Somebody asked me, which AI generator am I using? I'm using one called midjourney.com is the one I'm using. I've used a whole bunch, but the quality of the images is just phenomenal with midjourney.ai. Who knows, maybe down the road I'll do a show on Midjourney AI for you guys. So they topped earnings. Let's quickly look at what those numbers look like. So what's important for me in someone who lightly, and I say lightly, looks at the fundamentals is, are they growing, right? We have been under this impression that everything is slowing down, that all these companies are suffering, and that Tesla is no longer selling vehicles. Right? This is kind of what the media has been precipitating to most of us out there. So this is their financial statement. I'm going to just click forward here. I'm going to highlight a couple things just for those who might be new to reading this stuff. Let me go up here. This is Q4, Q1, Q2. I'm putting out the top headers here for the podcasters. Sorry for the torturous talk track. And then this is Q4 again. And what I'm putting on there, and this is Q4 2022, and this is Q4 2021. So this is just kind of going from left to right, showing you the earnings. And most people will compare year over year. So there we go. And then the very last part is on the right-hand side, you see year over year. So the reason I highlighted all the red ones is to see where did they miss the mark. So they did really well on automobile revenues. They 33% year over year growth. That's phenomenal, especially with all the competition coming in. They had 33% year over year growth on automotive revenues. Of which regulatory credits, that increased 49%. Automotive gross profit was 13%. So not too shabby there. Where they missed us is automotive gross margin. That dropped by about it says 466 basis points. So that dropped a bit. That's about 4.5%. The next level here takes us to total revenues. They beat that by 37% year over year growth. Same thing with gross profit was up 19%. The total generally accepted accounting principles gross margin, though, they missed just a little bit. They were down, 3.6%. I wouldn't call that horrible, considering when their share price is down like $70 or 70%. Operating revenue, I missed one. Operating expenses has declined, and they had more income from operations. That increased 49%. So everything's looking pretty darn good. Here's where you get the earnings before income tax and depreciation adjusted for margin. They were just ever so slightly. They dropped from 23.1% to 22.2%, okay? I don't see anything so far that says Tesla is struggling, Tesla is screwed, Tesla is in bad shape. Big net flow cash for the difference. So where did I have the net cash flow? Is that the one you're talking about that I'm on right now? Net cash provided by operating activities. That dropped 29%. So that certainly is a big negative there. And then lastly, you have free cash flow, which is money that's left over after all the accounting stuff. And that dropped 49%. So that was your biggest miss there. But, cash from investments jumped 25%. All in all, it looked pretty good, looking above all three factors missed. Well, on certain factors missed, right? We could pick apart each one of these and say that there's some flaws in there. But as a general overview, because as you guys know, I am not a fundamentals guy, but as an overview, it really doesn't look too bad. And keep in mind, there's a couple things that are looming down the pipeline for Tesla, in my opinion. Number one is going to be more announcements about the final release of the Cybertruck. You have the Roadster potentially coming out, and you also have the Semi, which is going to be a little bit further down the road. So those are three brand new products that could separate it from the competition. You also have, or there was a couple other pieces I was going to get to, but maybe my brain just skipped a beat there. Share buybacks, right? That has also been a talk track, and that could very well happen, especially with some of that free cash flow. Maybe that goes into share buybacks, although I'm assuming they want to get that free cash flow back up. Is it still a high growth company? looking at the PE ratio, yes. So I don't know off the top of my head, so let me go over here real quick and pull up the PE ratio for Tesla, just so we can have that one out there. So bear with me as I'll call on TJ as if he was still here with me in my house. TJ, can you bring up I need the PE ratio for Tesla, if you wouldn't mind? Thanks, TJ. All right, so here's what TJ got for me. PE ratio, 41.5. Right now, the S&P, I believe, is trading at an 18 PE ratio, which is actually getting back to somewhat historic levels. I'll verify that in just a second. So, in theory, Tesla is double the PE of the S&P 500 right now, which would, in my mind, put it in the category of a growth stock. Do they still have a lot of potential products that could surge their price going forward? Yes. But I think, they're losing a little bit of their luster because of so many other competitors. Obviously, you've got General Motors and you got Ford coming out with electric trucks and a lot of other electric vehicles. Lucid, you had NIO and all these other ones coming and taking. And BYD actually is now, I believe, the biggest electric vehicle manufacturer in the world, which is partially owned by Warren Buffett, by the way. That's BYD. So let me go there and look at SPY just so I can see. And I usually don't trust these numbers anyway, but it says PE ratio for the trailing 12 months is 21.72. Yeah, I never look at forward PE ratio, Ganesh, because that assumes people know what the future is going to hold with regards to earnings. I'd rather go off of what actually happened versus what the future might hold. So PE ratio in the trailing 12 months, not the forward, but trailing 12 months is 21.72. So it's still about double the PE ratio of the S&P 500, which would put it in a growth stock category. For example, what's another? What would be another growth stock? You guys throw into chat what you think might be some other growth stocks we could compare this to. All right, Tom says, Tesla's been on a long, steady journey from Silicon Valley hype valuation, 1,000 PE, to an automotive valuation of 5 to 10. They are a car company. We have to disagree on that one, Tom. Yes, they make vehicles, but I think that they're a technology company as well. I think they're one of the few that could bridge those two. So yes, they are a car company because they make vehicles. There's no arguing that. However, there's a lot of other technology that Tesla makes. Their battery systems, they're making their own types of batteries. You also have, you could say they're not in auto, they're in trucking as well. So they start to bridge a lot of different fences, which I think some other companies don't do. So NJ says, see, Carvana, you're going to call Carvana a growth company? I would not, absolutely not call Carvana. Let's bring up CVNA. Yeah, I wouldn't call Carvana a growth company. But my guess is if we look at the PE ratio of Carvana, this thing's going to look really negative because I don't think they're making any money. Let's just real quickly do that just for fun. Let's go look at Carvana. CVNA, what's their PE ratio? PE ratio not available because you have to be making money. It's losing $4 per share, so clearly not a growth company. Do you honestly believe Tesla has a competitive advantage over its peers? In some areas, I do. I think that Tesla has a competitive advantage with the AI. I think that Tesla has a competitive advantage because of, I hate to say it, because of Elon Musk. I think that he's a different type of beast than a typical CEO. Their vehicles, are they that great? Look, a car is a car. Certainly there's some nice features of a Tesla. So I don't think they have the dominant edge there. It's just right now they have the name. And when you think of an electric vehicle, nobody really goes out there and says, oh man, yeah, I want to buy myself a Chevy Volt. Oh man, I got to go buy myself the new Acura E-Class electric vehicle. It's Tesla. It's the first thing that pops to your mind. So they've already got that name brand recognition that I think is the big driver for them and helps. So in that sense, I would say it gives them a bit of a competitive advantage, at least from the names. As far as production goes, I don't know. Tom would know better than me. He's been in automotive for a while. Give anything. Hey, you know what? There is not anybody else in the course of history which has created multi-billion-dollar companies every decade. He has, I think, 6 of them now. He's done Tesla. He's done PayPal. He's done SpaceX. He's done the Boring Company. And now OpenAI, which just sold, I don't know if it sold all of it, but part of it to Microsoft for $10 billion. I mean, this guy has a serious track record. It's hard. You can love him or hate him. It doesn't really make a difference. The guy, for whatever reason, he works. He gets stuff done. It's hard to go against someone who has that kind of track record. I'll polarize a lot of you here, but you could look at somebody like Donald Trump, who is always gloating and saying what great businessman he is and how great of a business person he is and all these successful businesses. But when you actually look at the numbers, it's failed business after failed business after failed business after failed business. But he says what a great rich man he is. I don't see Elon Musk out there gloating. He's saying, I just want to make a difference in the world. And that's why I respect the guy, because he is literally creating these just epic companies, which I think are bettering society. But that's just me. We won't go down that political route. So Carvana, no. Let's see. Lucid, that's tough. You know, I'm not sure if I would call Lucid growth. I think that the EV companies as a sector, I don't know if I personally would call them growth stocks. Yes, there's big upside potential. If anything, I'd be looking more along the lines of a growth stock for me would be somebody that's putting in the infrastructure for electric vehicles, meaning who's putting in the charging stations. That would be a growth company. I think it's so, oh yeah, tons of times, Lori. I think that industry, while it is a quote unquote growth industry, you got so much competition coming in it now. It still has upside potential, but not what it used to, at least in my opinion. So let me do one more. Just there's a graphic here that I wanted to show up. I found some really cool pictures. This is from Tesla as well. This is their 2022 deliveries. Nearly match all of its total vehicle sales from 2012 to 2020. So over 8 years, in that 8-year window of time, they sold roughly 1.3 million vehicles, and that's what delivered 1.3 million vehicles, and they delivered that alone in 2022. So, too many who have had them say they won't do it again. Yeah, you know, and Bill, and I'm in that camp. If anything, I would lease an electric vehicle right now. I wouldn't buy an electric vehicle. I would lease it because I just don't trust the batteries. You know, how many of you have a cell phone? I just got this iPhone 14. It's awesome. Battery's great. It lasts me all day, no problems. But I'll tell you what, 2 years down the road, I'll be lucky if that thing makes it halfway through the day or a third of the way through the day without needing to be plugged in. When's that going to happen to your Tesla, right? When's that going to happen to your Prius? I just think the technology is so new. I think electric vehicles are great, but I would lease one. I would not be buying one. Sitting inside a Tesla, like me, sitting that's empty box. Not sure what the attraction for empty boxes are for cats. It's a good one, Lisa. I actually liked it. It's just, I think it takes a while to get used to because we're so used to the way that our cars hug us and form around our body, where I think Elon Musk just wanted this open space feel. So, Google interest in buying Tesla. I didn't hear that. I didn't hear that one, but let's see. Yeah, what's Enphase's ticker symbol? Let me bring that one up. Oops. It's a tough one. I hard to remember that Enphase. I think it's ENPH, right? Yeah, ENPH. So here's ENPH's chart. Talk about growth stock. Enphase Energy. You know, I think that the battery technology companies, alternative energy companies would be considered growth stocks at this point. A real ugly looking chart here. Don't try to catch this falling knife because it looks like it's broken down below some demand zones. But if I look at ENPH from a PE ratio, we'll just bring it up over here. Yeah, you got 103 PE ratio. And they're earning money, right? They're making $2 per share. So they're not making a ton, but they're making money. And, you know, people are still buying into that one, expecting there to be more profit ahead. So yeah, call that one a growth stock if you want. Let's see. Big Eb, you drove a Prius or a Model S? Drove a Model S for 4 years. They're great, but if you're doing 20,000 miles per year, yeah. That's what I'm waiting. The Lightning looked really good. I almost put in on the wait list for the F-150 Lightning, but you know what? I figure at this point, kind of like I was telling you guys, at this point, I'm just trying to, I'm reining in all my expenses. I'm trying to buy as little as possible. It's funny, one of the chapters I'm writing in my book, which I was writing last night, breaks life into needs versus wants. And if you run an expense tracker and you look at all the things you buy, a lot of it is things that you want. Like I want the F-150 Lightning. Come on, who doesn't, right? Do I need it? I've got a Toyota pickup truck, 4x4, double cab, camper shell, does everything I want it to do. And I'm not a real big, you know, flashy vehicle guy. So I'll ride that thing for another 5, 6, 7 years. You know, I want the truck, but I don't need it. And if we focus on life like that, the more that you can eliminate a lot of the wants, the more money you will have for disposable income, which means you will now be able to invest more in your markets and grow your wealth versus buy something that's most likely a depreciating asset. Anyway, finance class will be over. We'll save that for Susie Orman on another show. Let's go and, all right, so I mentioned the Elon Musk piece. Let's go look at what happened out there with Tesla's chart. So I'm feeling pretty good about my puts. You guys know I sold the weekly puts on Tesla. Here is what happened with Tesla. We'll go to a 5-minute chart, and, you know, given their earnings announcements, they had the initial whipsaw, right? But nothing happened. This, for me, is ideal, especially because of the options that I sold. As you guys know, I sold the 125s. I sold a few of those. So if it doesn't get there, I'll collect my, 1.5, almost 1.75% on my Tesla premium for the week. Great. Right? I'd like to do that more often. Give me 1.5, to almost 2% per week would be great. But I'm not out of the woods yet, right? Something could come out. The press conference could come out and say that deliveries are delayed. They're not going to do something. The battery, the federal investigation, whatever, could push this much, much lower. But for me to be executed on those puts by Friday, this thing has to drop a long way. So getting all the way down to here, it would have to drop. Oh, come on, Merlin. It would have to drop a pretty substantial percentage. It would have to drop about 14% by Friday. I don't see that happening. Don't see that happening. But, stranger things have happened. So that's obviously pretty good. I guess the big question now is, where does Tesla go? Based off those earnings, I think I'm actually expecting more upside potential here. So I will probably look to sell options or sell puts again, because I'm happy to be owning Tesla, because I do think you're going to head it back up to the 160, 170, 180 mark. So fine, sell some puts, collect some premium, and if it gets back down there, I'll own it. Based off those numbers, I think Tesla's going to be okay. Let's see what else. Agent Sancho says, the question isn't about the needs versus wants. I think your thought or question needs to be, what is the purpose of my money and what I'm using it for? Sure, and it's that, as well as there's a chapter I'm doing on needs versus wants. There's also a chapter I'm doing on good debt versus bad debt, and this is another one I think a lot of people really screw themselves on, is they don't know what good debt versus bad debt is. And I'll make it very simple. If you have a balance on your credit card of any amount, that's bad debt. I don't care what you bought with it. Doesn't matter. If you have a balance on your credit card, that's bad debt. That's a stupid investment. And I know we might not be able to make those payments, but the average credit card, I believe, interest rate is about 22.9%. Good luck finding investments that you can make 22.9% with regularity. Good debt is borrowing money and then doing something with it that's going to give you a greater rate of return than the interest that you're paying. A lot would argue that college is a great use for debt. Nowadays, many people might argue that and say it's just not worth it anymore. Go to a trade school or learn online some craft. That said, if you have a credit card debt, that should be your first focus anyway. So, 100%, Lori. No debt is best, but I would argue that debt is a good thing, right? I think that debt is a good thing. For example, if I can borrow money at 3% and put it in an investment, whether maybe that's buying a home, right? So the average annual rate of return for a home over course of time has been about 8% per year appreciation. Well, then with that said, then a mortgage, we could argue, is good debt, right? Because let's say even if you've got a mortgage today, you're getting maybe 6.5%, 6 to 6.5% for a 30-year fixed rate mortgage. And if you're getting an average annualized rate of return on your home about 8% over time, then you're making 1.5% on that borrowed money. So that is what I would deem to be good debt. Now, I think a lot of it does with market timing. So one of the examples I'm been working on last night, I want to get all the details, and I'm certainly not going to tell you them all because I would love it if you guys bought the book at some point, is, if you're buying a house right now, might not be the best time from a market timing perspective, because there could still be a good 15, 20% decline in housing prices. So, timing those investments, utilizing debt, to me is a very important decision. Tying into what Lisa just says, some debt is good. It helps build credit. 100%. You've got to be using your credit. Believe it or not, the more credit cards you have, the better your credit score will get. Believe it or not, the more you have. So don't just have one credit card. I have one of every one except American Express. So I've got Discover, Visa, MasterCard, and some of those I actually have a couple. But the more you have, the better. Can I put it on my credit card? What, your mortgage, Gary? You can. On some lenders will actually let you pay your mortgage with your credit card, but and here's a big but, what they charge you is a 3% fee. So it's not worth it. There are some, I have everything set up for automatic payments. My mortgages and everything. And if I can find a situation where I can utilize my credit card to make a normal purchase, whether that's property taxes, my cable bill, my water, anything I can pay with my credit card that doesn't charge me a credit card fee, I do that. I put it, yeah, you can put my book on your credit card for sure. Load up, buy 50 of them. Give them to your friends. Certainly you can pay for my book with a credit card. I'm still trying to figure out how to sell it, but I got to finish writing it, I guess, at this point. And Nick's giving me a hard time about writing a book. Anyway, I think you're good at that. Yeah, I think I'm good at that Tesla play too, Big Ab. I was a little nervous going in because if they missed big, you could see that thing fall 15, 20% tonight. But I don't think by Friday we'll get there. So I'm feeling very comfortable at that. That's right, Sheena. If I was to write like the very beginning of the book that I'm working on, the initial title for one of the books was The Guide to Getting Rich, right? And it really, I think it's something that everybody aspires to get to. Everybody wants to be rich. You see the Kardashians and Kanye West rolling around in all these Lamborghinis and Ferraris. Like, I have no desire whatsoever to have Lamborghinis and Ferraris. Even if I was filthy rich, I really don't think it would be my thing. The bottom line is, in order to get rich, you either have, if you want to get rich without working, you play the lotto. That's it. Really no other way. Or you get lucky or you inherit big money. If you want to get rich from actual work, you have to have your personal finances in order first. Number one, before you can even think about getting rich, you have to get yourself to the point that you are in a position to invest and make money. I've seen way too many people come through the doors, not only of OTA, but of other people at other places where they're talking about how much money they're going to make trading, and you sit down with them and they start talking about their personal finances, and like, you realize that you're losing $2,000 a month the way that you're living. Well, you're basically running a bad business. Your life is a business, so manage it like one and get to positive cash flow, and now you can start to grow. If not, you will always be headed towards bankruptcy. I had a Porsche, Nicola, but that was a different story. Right? That wasn't an exotic car. That was actually a replica of the greatest car ever made. The sexiest. If you could make vehicular pornography, the centerfold of it would be 1955 Porsche 550 Spyder. That was the car that James Dean died in. That's the car I had. I had a replica. The thing was like 20 grand. So I wouldn't say that's a flashy symbol. It's been a car I always wanted, but in order to buy that car brand new, guys, that's a $2 million vehicle. I would never buy the original one. Like, maybe not. If I won that lotto, maybe I'd buy an original. But just like Travolta and get a 10-year-old Mercedes and be happy. Yeah, I would stick with it. No, I didn't like the 356, JB. My dad had the 356. It's the 550 Spyder. Look that one up. The 550 Spyder to me is one of the most beautiful vehicles. All right. Just because you brought it up, I will bring up the 550 Spyder. So here it is. Drum roll, please. That's the 550 Spyder. I love that car. Mine was black. Basically, I had this model right here, all in black. If they have the black one. No, my vehicle is not on there. But yeah, I think it's one of the best looking vehicles you could buy. So gorgeous. Shelby Cobra's pretty cool too, and there's a ton of replicas out there. Anyway, we're totally drifting off topic here. Don't get it now. We got me off on a total tangent. So, as far as Tesla goes, I'm bullish on Tesla. I like what it did with their earnings. It wasn't the greatest in the world, but it wasn't horrible either. And given what's been going on, 914s. No, James Bond car was the. They were always Alfa Romeos. No, Aston Martin. James Bond was always Aston Martin. Yeah, JB. Your butt is on the ground. My car was 2 inches off the ground. That's why I got rid of it. I was really scared driving that vehicle. Okay, let me see. I had a couple questions come through that I want to make sure I get to. I did that one yesterday. I think I did all those questions yesterday. So there was one that came through maybe on the Twitter feed. Sorry, I've got like a million things going on. So Mike, you said, just curious, don't the services all look at the same info for estimates and actuals? Here's TradingView and Earnings Whisperer for Progressive. They are different on actual and the estimate. So they should be the same on the actual. What happens quite often is a lot of them are different on the estimate. And sometimes people will quote the industry estimate. And then there's something called the whisper, which is kind of what is not really published. It's more on the street, if you will, kind of what the back end, if you walk through the halls of the company, they're saying, oh yeah, we think they're going to be this, which I don't know why we have this earnings whisper number, the word on the street, etc. So they are going to be different. They should all have the actual the same. Now let me see your graphic here. So you have Progressive on there, earnings $1.50 per share. Yeah. Now, I'm not sure why those are different, but they should be the same. The one that's going to be different is usually the expectation. That's that big difference there. Are you part of the... I'm not part of that summit tomorrow. No, I was not invited to that one. Well, so I was invited. I'm always invited to them, but I will not be presenting there. There's another event that OTA is going to be doing on February 14th, which will be fun. That's going to be a whole bunch of us kind of giving a market outlook and forecast, and I will be a part of that one. There you go. And I think we can run from there and look through bottom to top. And now these numbers have all changed. As you guys know, I'm doing the show live. So when you look at CNBC, Fox, and Bloomberg, they will always give you just the final closing price and quote it from that. I'm showing you what's happening as of the time of recording of the show, which is 2:32 Pacific time. We are officially an hour and 32 minutes after the market close. So these numbers change because I'm looking at the futures. Now, if we look at the bottom of the barrel, Bitcoin, right? It's down 0.5% today. Not that big a deal, especially considering where it's come from. We were at 16,000 just a few weeks ago, and here we are, getting very close to that 24,000. So this is great for anybody who is optimistic about crypto. Keep your eye on this 25,000 level. If we get a close above 25,000 on Bitcoin, then I think you've got a $5,000 pop just about to happen. I think it'll jump 20% in like a few days. Why? Because you've got nothing to stop it. It had this huge sell-off back here in June of 2022, and we haven't closed that gap yet. So again, this is the futures. You don't usually get gaps on the spot price, but this is the futures. So that gap will probably act as a magnet, but we got to get a close about 25,000. My guess is we'll move towards 25, hit it, come down a little bit, and then test it again. Our high that we achieved was 23,770 on the futures side of things, so not too shabby. Now, here's the one that was kind of a shocker today, given what happened out there with Microsoft, which again is the number 2 component of the NASDAQ 100, which this is the futures for the NASDAQ 100. You had a pretty ugly start. I will go and show you the 5-minute here just to really draw that. Oh yeah, if anybody here likes Mini Coopers, Nicola there has a gorgeous classic Mini. Of course, he can't drive it because he modified it so much. The Czech government won't let him drive it on the street. So good luck with that one, Nick. It's gonna be a little showpiece. Here is what happened this morning. So you guys can see the Microsoft pop early, right? That was yesterday. And then it came crashing down. And all night, this thing was just drifting lower and lower and lower. We got to the market open, and for about the first hour and 15 minutes, we just kept getting lower and lower and lower. It's like, wow, okay, that did not look good. And then all of a sudden, we started to rip to the upside. Now, there wasn't anything really from a macroeconomic perspective that caused that big rally up. Maybe just a bit overdone. We could point the finger at a lot of different things. Either way, it was a very good intraday move. I actually did not capitalize on this today. The only thing I did, I sold some, in a 1% account, I sold some puts on XLU. I went into utilities just because if the markets do start to sell off, I think utilities will actually hold rather well. So I sold some XLU today. Other than that, I didn't make any directional trades on this NASDAQ, which was down, as of right now, 0.3%. S&P 500, pretty much unchanged on the day, even though it had this crazy wild slide, right? It drifted down all night, market opened up, it sold off for a minute, and then just great bullish move on SPY. A little disappointed because I really wanted to sell some options today, and I did not sell on SPY or QQQ, which are my 2 targets today. S&P closing at 3,032, just pretty much unchanged. And same thing with the Dow. We'll call it unchanged on the day. Now, getting into more volatile stuff, you had like a bad EKG. I mean, this thing is all over the place on the 5-minute chart here for crude oil. Unchanged on the day, closing at $80.15 a barrel. But the daily, again, based off this chart, I would expect it to sell off. If it doesn't, that is a great argument for anybody who's bullish out there, and we'll have to wait and see how it all pans out. But all in all, still holding pretty good. Hasn't sold out of that area of supply yet. Number 2, Russell 2000 was up 1/4%. Again, still smacking its head against those highs right around that, right where it's at, right around 1900 on the Russell 2000. You notice we have not had a close above 1900 on the Russell going all the way back into September of last year. That's a long time to stay below. So a close above 1900, which we did not get today, could act as a very nice catalyst for that pop to the upside. So looking forward to that one. And then gold continuing its run. I'm still holding tight with my thought it's going to get to 2000. You're at 1942, up 0.37% today, and just a gorgeous uptrend on gold. Unfortunately, silver not following the same suit. I was trying to sell some puts on silver earlier this week on Monday. I did not. I just missed by a couple cents on my price because I got a little bit greedy, but it is what it is. So there's your top 7. Dollar index not doing too much, just still continuing its slide. I know we had a discussion in here about where's that thing going to bottom out. Well, in reality, that 101 number looks really good from a bottoming out perspective, at least stalling and maybe having a little bit of a bounce here. But the trend is your friend to the bend at the end, guys, and that dollar is going down. We could look at some currencies out there, which, of course, have been just, if the dollar's tanking, the euro is soaring. So, Nick, if this euro keeps soaring like this, you're going to have to come visit me. I've got an open room for you, buddy. Come anytime. And then lastly, let's go look at those bonds here real quick. We had a breach of this uptrending line on the 10-year, and it was there 1 day, 2 days below it, and now we've ripped up above it. So I'm really curious to see what the next couple weeks hold. Do we start to drift lower and continue this downtrend, which started in October of last year, right? I think you guys can all see that. Let me just draw some lines in here. This is not a good example of how to draw a trend line, but close enough. You know, so we've got 1 point, 2 points to make the trend line, third point for confirmation. So a true purist would argue that we are in a downtrend now based off the trend line. You could also, I think this will let me do it in here. Let's see if I can create a parallel channel. No, won't let me create a parallel channel. All right, well, I know you can do it in here, but I don't use TradingView that much. You know, you look down here at the bottom. I try to create an exact parallel line and move it down to here. So if we create a parallel line like that, we're kind of middle of the range. And if the downtrend is still intact, we should see it break further below this uptrending blue line. That's important because a lot of people are looking at that. I am as well, and seeing that it's holding. If that breaks, then we could see more downside movement here on that 10-year. That still has not changed the inversion. The inversion is actually getting worse. This is the 10-year and the 1-year, which Bill Addis says is the true measure of an inverted yield curve, and it's just getting worse. 1.2% is now the inversion, meaning if you bought a 1-year bond, you'd actually make 1.2% more versus buying 10 years, which is not the way it should be. 30-year and the 2-year, still 50 basis point difference. The chat is discussing various topics related to technology and finances, such as Tesla fund. Yep. Click the arrow on the trend line selector, and then click parallel. Let me go back to that one. Thanks, Don. What up, Don? Let's go back to my 10-year here. I've done it before, but my brain doesn't work. So click, this is what we say. Click the arrow on the trend line. What? Oh, this little bad boy over here. I don't see it. I don't see the arrow on the trend line. I'll figure it out another time. I know you're teaching me the right way. I know you can do it. I've done it before, but I can't do it off the top of my head. So I'll figure that one out. But I'm pretty damn sure that's pretty close to a parallel channel there. So that's something to keep an eye on is that 10-year, of course, as that 10-year continues to drift down. This is the yield. This is bullish for the equity markets. The lower this goes, the better it is for equity markets. So we'll have to keep our eye on that one as well. And I think we covered everything. We covered equities. We covered Tesla. We covered bonds. Oh, and the trend line selector tool. Okay. This bad boy over here. Parallel channel. That one. So I don't have to do this, and then it creates one for me. Yeah, there you go. Yeah, I was pretty damn close. All right, I'll just leave that one right there. It looks better like that anyway. Thanks, Don. Appreciate that. All right, that's going to do it for me. Now that we are near the end of the show, I did 40 minutes. 40 minutes out there today should be good. Tomorrow, I guess I could look at your economic calendar and earnings calendar for everybody that might be of interest. So let's start things off with our economic calendar. On the 26th, if you look through, it's a big day for the U.S. Quite a lot of stuff here for the U.S. GDP comes out tomorrow, and I've mentioned how important this one is. I know most people don't care about GDP, but that's one of the big factors in determining whether we are in a recession. Now, we aren't technically in a recession based off GDP numbers, but we'll see how quickly this changes. Remember, it's advanced as the first one. Preliminary comes out next month, and in 2 months, we get the final GDP. So this is really the first reading of our upcoming GDP announcement. a lot of eyeballs on this one. The previous 3 times it has beaten the expectation. So right now they're saying 2.6 versus the previous, which is 3.2. We will see what ultimately turns out with the GDP, but that's going to be a big one. That's before market opens. Same thing, durable goods. You've got preliminary wholesale inventories, goods trade balances. Once the market opens, 30 minutes into the session, new home sales, natural gas storage. So you have a lot of big stuff happening on an economic front. And then, drum roll please, are earnings done? No, they're not. Intel, Visa, MasterCard, Blackstone Group, Archer Daniels, Midland, Valero Energy, American Airlines, Northrop Grumman, all reporting earnings. 2 of those are aftermarket close. That's Intel and Visa. Everything else will be before market open. So it could be a volatile, wild day out there for your markets yet again. And we'll see what the response is later due to the Tesla piece. Because, of course, Tesla... a lot of chop, but really not a lot of direction, which is fine for me and my options out there. I'm sure Don probably wanted a bigger swing because he's swinging some bigger positions in Tesla than I am. Tom says, I was trying to post output from ChatGPT summarizing his chat. Fail on my part. Oh, it's pretty cool though, Tom. Tom, you playing with that ChatGPT. All right, everybody, that's going to do it for me. I'm done. I will wrap things up here today. I know we have some new people, so for those of you who are new, hit that subscribe button. For those who are regulars, put comments down below the YouTube videos. I will happily talk about whatever topic you want, so if there's things you want to discuss on the show, the sooner you can get it to me, the more time I have to prep and create visuals for it. Sometimes when you do it on the fly, it's tough for me to pull graphics up and do that stuff, and I don't want to slow down the show. So as Lisa says, hit the like button if you like the show. If you don't like the show, that's cool too. Just make sure that you let me know why. Don't be an idiot and just like slam negative, thumb down, everything. Email me at TraderMerlin@gmail.com and tell me what you don't like, because I can always improve the show. Hope you guys have a fantastic remainder of your day. I will see you for Thursday's session. Take care.